Okay, so now let's discuss percentage taxes. This will be the last topic for business transfer. So we already discussed VAT, and then this one, percentage tax. Okay. So first, let's define percentage tax, which is the concept and the nature of percentage tax. So a percentage tax is a national tax measured by a certain percentage on the gross selling price or gross value in money of goods sold, bartered, or imported, or on the gross receipts or earnings derived by any person engaged in the sale of service. So this is supported in the case of CIR versus Solid Bank, GR number 148191 2003. Also, percentage tax is a business tax imposed on persons, entities, or transactions specified under Section 116 to 127 of the National Internal Revenue Code. So what is the nature of percentage tax? So it is a privilege tax. Like VAT, it is imposed on the privilege to sell commodities or services. So again, percentage tax is a privilege tax imposed on the privilege of the person to sell his commodities or goods or to sell his services. Okay. So tax base, the gross receipt is your tax base for percentage tax. Okay. So by its nature, a gross receipts tax applies to the entire receipts without any deduction, exemption, or exclusion unless the law clearly provides otherwise. Okay, what is the tax rate? So any person whose sales or receipts are exempt from the payment of VAT and who is not a VAT registered shall pay a tax equivalent to 3% of his gross quarterly sales or receipts. So basically, if you talk about percentage tax, ang pinaka-generic ani nga percentage is the 3%. But naanay mga specific as to the various services or goods kay mong ibaligya. Okay? But the generic for businesses, it is a 3% on the gross quarterly sales or receipt if you are a non-VAT registered person. Okay? Take note that cooperatives shall be exempt from the 3% gross receipt tax. Okay, so before I go on to that, so let's just discuss. I'll just read to you the provision of Article 116. Okay, because here, this is the summary, persons of transactions subject to percentage tax. This is the summary of the NRIC. Okay, but Section 116 provides that any person whose sales or receipts are exempt under Section 109 BB of this code from the payment of value added tax and who is not a VAT registered shall pay a tax equivalent to 3% of his gross quarterly receipts. Okay, that's line item number 1. Okay, so those persons exempt from VAT are liable to pay 3% gross quarterly sales, provided that cooperatives shall be exempt from the 3% gross receipt tax herein imposed. Okay? So, cooperatives as mentioned is not subject to 3% percentage tax. Okay. Before, ang kanang percentage tax guys, monthly na siya. But tungkol sa train law, it is now on a quarterly basis. Okay. Next, line item, Section 117. So, Section 117 provides cars for rent or hire driven by lessee transportation contractors, including person who transport passengers for hire and other domestic person who transport passengers for hire and other domestic carriers by land for the transport of passengers except owners of bangka and owners of animal drawn two-wheeled vehicle kanang mga kalesa is not subject to bangka and kalesa is not subject to percentage tax, and keepers of garages shall pay an equivalent of 3% of their quarterly gross receipt. So you can see there the summary is 3% of gross quarterly receipt. Okay, domestic carriers, keepers, or garages. But later on, we'll differentiate it further. Okay, we will discuss or digest domestic carriers and keepers of garages because that's the general rule, 3%. Okay, so they get okay. Then gross receipts of common carriers derived from their incoming and outgoing freight shall not be subjected to the local taxes imposed under Republic Act number 7160 or the Local Government Code of 1991. So once subject na percentage tax, then the local government cannot impose another tax on that. Okay, mandated man sa balaod. Okay. So for international carriers, that is also 3% of gross receipt, but take note, it is provided in section 118. International carriers doing business in the Philippines on their gross receipts derived from transport of cargo from the Philippines to other country. Take note, transport of cargo. So passengers is not allowed. Only cargo subject to 3% quarterly gross receipt. International shipping carriers doing business in the Philippines under gross receipts derived from the transport of cargo from the Philippines to another country shall pay an equivalent of 3% as well. Okay, just take note. Only cargo and the transportation must be from Philippines to other country or outbound. Section 119. So for radio, television broadcasting companies with annual gross receipt not exceeding 10 million, that is subject to 3% gross receipt derived from the business covered by the law granting the franchise. But not exceeding 10 million. Kaya mo exceed na sa 10 million, guys, that is subject to VAT. Okay? Note, however, that franchisees may opt to register as a VAT taxpayer, which shall be irrevocable once exercised. So bisan pag less than 10 million, but the franchises are opt or select sila nga mag-VAT sila, then VAT na siya and cannot be revoked once exercised. Okay? So kung 10 million below ka, pwede ka 3% or mag-register ka as VAT. Or once mag-register ka VAT, then irrevocable na siya. But katong franchises na more than 10 million, that is subject to VAT. Okay? Gas and water utilities. So they are subject to 2% on gross receipts derived from the business covered by law granting the franchise. So si gas and water, that is subject to 2%. Okay? So section 119 provides that any provision of the general or special law to the contrary, notwithstanding from shall be levied, assessed, or collected in respect to all franchise on radio, television, broadcasting companies whose annual receipt of the preceding year does not exceed 10 million, subject to section 236 of the code, a tax of 3%. Gas and water utilities shall be subject to 2% on the gross receipts derived from the business covered by the law granting the franchise. Okay? Let's go to the next. Section 120. This is regarding the overseas dispatch messages or conversation originating in the Philippines. So this is more on the calls, overseas calls, text, okay? Wala siya, ang section 120. It is provided in section 120, there shall be collected upon overseas dispatch messages, conversations transmitted by the Philippines by telephone, telegraph, typewriter, telewriter, exchange wireless and other communications equipment services, a tax of 10%. So 10% on the amount paid for such services. The tax imposed in this section shall be payable by the person paying for the service rendered and shall be paid to the person rendering the services who is required to collect and pay the tax within 20 days after the end of each month. So, kanang mga PLDT, Globe, okay? So, they are subject to 10%. However, the tax by this section shall not apply to what are the exemptions? First, government. So amount paid for messages transmitted by the government of the Republic of the Philippines or any of its political subdivision or instrumentalities or agency are not subject to 10%. Okay? So government gani mo ba mo request sa service what ay labot ng 10%. I mean not taxable. Diplomatic services, amount paid for messages transmitted by any embassy, consular offices of a foreign government is also exempted. International organizations, so amount paid for messages transmitted by a public international organization or any of its agencies paid in the Philippines, enjoying privilege of exemptions and immunities within the government of the Philippines is committed to recognize pursuant to international agreement. And we have number 4, news services. So amount paid for messages from any newspaper, press association, radio or television, broadcasting agency, news sticker services, or to any other newspaper, press association, radio, television, who is bona fide correspondent, which messages deal exclusively with the collection of news items or the dissemination of news item through public press, radio, and television broadcasting is also exempted from the 10% of the amount paid for such services. Okay, take note. So usually, this is more on the private messages that we send. Okay, ang taxable. Section 121. So this is intended for banks and non-bank financial intermediaries. So the following taxes collected on gross receipt from resources within the Philippines, interest, commissions, and discounts from lending activities, as well as income from the financial leasing based on the remaining maturities. So subject to 5% if 5 years or less. But if it's more than 5 years, guys, that's subject to 1% percentage tax. Okay? The dividends and equity shares and net income of subsidiaries are subject to percentage tax at 0%. Royalties, rentals, or properties, profit and exchange, and all other items of gross income under Section 32 is subject to 7% percentage tax. Okay? Net trading gains within the year on foreign currency debt securities, derivatives, and other financial instruments is subject to 7%. So that's the percentage tax for bank and non-bank intermediaries. So how about other non-bank financial intermediaries? So that is section 122. So 5% on gross receipts derived from interest, commissions, discounts, and other items of gross income. So 5%. Note, however, that interest, commission, and discounts from lending as well as income from financial leasing shall be taxed based on the remaining maturities. Same sa bank. So 5 years or less, 5%. More than 5 years, that's 1%. So take note that pawn shop are considered as non-bank financial intermediaries. How about life insurance? So section 123 of the NIRC, that's 2% of the total premiums collected, whether paid in money, notes, credits, or substitute money. So kung pilay na collect nga premiums, insurance premium, that is subject to 2%. Okay? So taxable premium exclude premium refunded within 6 months. Kung refund within 6 months, that is not included in the premium computation. Reinsurance is not part of it. Premiums collected of the life insurance of a non-resident insured is not part of the total premium. Premium collected on variable contracts in excess of the amount necessary to ensure the lives of variable contract owners. Note purely cooperatives, companies, or association are exempted of this tax. Okay? Sige. So winning, so this is section 126. So horse races, that's subject to 10% on the actual amount paid for every winning ticket after deducting the cost of the ticket. Kung double forecast or quinella and trifecta bets, that is 4%. And the owners of winning horses, so 10% of the prices. That is the percentage tax. How about sale, barter, exchange of shares of stock listed and traded through the stock exchange or through initial public offering? So sale through the local stock exchange other than sale by a dealer in securities. So 6/10 of 1% of the gross selling price or gross value in money of the shares of stock. Okay? So that's the percentage tax if nagbaligya ka shares of stock through the PSE. Okay, sale through IPO share of stock in closely held corporation. Okay, that's the same percentage, 6/10 of the 1%. So sale through IPO of shares of stock in closely held corporation, the tax is based on gross selling price or gross value in money of said shares in accordance with the corporation or shares disposed to the total outstanding shares after listing it. So if up to 25%, that's subject to 4%. Over 25% gani, but not over 33.33%, that is subject to 1%. What is a closely held corporation? That's any corporation at least 50% in value of the outstanding capital stock or at least 50% of the total combined voting power of all classes of stock entitled to vote is owned directly or indirectly by not more than 20 individuals. So here, the summary of tax on carriers by Llanos. Okay, so kung by land gani guys, so either ang gikarga is person or goods or cargo. Okay? So kung person, then domestic, by land, then domestic, then person, that is subject to 3% tax, percentage tax. Okay? If domestic, then by land, like G, mga Bihar, pero mo na siya ang person. But by land ganit din domestic, but cargo kana mga van, delivery van, okay, kay cargo man ang delivery na, di man pasahero. Okay? So that is subject to ban. Okay? So only person, by land, domestic, and person is subject to 3%. So if cargo nang ina, that is subject to 12%. Okay, what if adto ta sa air or sea? So kung domestic gani, okay, subject to 12% if ang iyang person, cargo, or goods is domestic travel lang. For example, Supercat, okay, TransAsia. So they're carrying cargoes and persons, right, by sea. So then their travel destination is within the Philippines naman, so domestic travel. So they are subject to 12% VAT. Okay? Okay? So, next. Domestic iyang kain, but iyang travels international travel. Okay, for example, butang lang nato si AirAsia or si Cebu Pacific na siya travel abroad. Okay, na siya international travel. So kanang travel nila international travel, that is subject to 0%. Why? Because again, ang consumption niya, hindi siya subject sa VAT because the consumption is outside. Right? So that is subject to 0%. Okay, that is effective. Okay. Next, what if for international by air or sea? Depende na. So kung person, that is VAT exempt. Okay? Kung person, for example, Singapore Airlines, Malaysian Airlines, may ana ba? International ilang flight. I mean, international ang operation. Okay? So that they are VAT exempt. In terms of cargos and goods, example, Ma-Airs, Manat, Evergreen, those are international shipping or cargo companies. Okay? So, as long as they're doing business in the Philippines, guys, they are subject to 3% tax. Okay? Kung international gani, depende na kung person, ang passenger, then that is subject to, I mean, that is not subject to VAT or VAT exempt. But if ang ilang karga is cargoes or goods, and then doing business in the Philippines, that is subject to 3% percentage tax. Okay? So in computing the percentage tax provided in this section, the following shall be considered the minimum quarterly gross receipt in each particular case. Okay, so this is in support of section 117 in terms of katong domestic travel or domestic carrier. So pasabot ani jeepney for hire, Manila and other cities, that's 2,400. Provincial is 1,200. Mo ni ang minimum na sales. Okay? So again, sa BIR ani, under tax laws, whichever is higher sa actual nga gross sales or the minimum. Okay? So kung jeepney ka, 2,400 kung Manila and other cities. Kung provincial na, 1,200. Public utility buses, not exceeding 30 passengers ganyang capacity, that's 3,600. Exceeding 30,000, 30 passengers but not exceeding 50 passengers, that's 6,000. Exceeding 50 passengers na ka imong bus, then that is 7,200 per quarter. Mo na ang minimum halin dapat. Okay? How about taxis? Manila and other cities, that's 3,600 in a quarter. Provincial, that is 2,400. How about car for hire? Without a chauffeur, that's 3,000. What is chauffeur? That's a driver. Okay? So car for hire with driver, that's 2,000. Car for hire without a driver, that's 1,800. Mo na mga minimum rate. So if magkikita ka sa problem na mas lesser ani ang amount, then you will use this minimum rate, minimum gross receipt in computing the percentage tax. Okay? Now let's go to exercise. Juan is an operator of 5 jeepneys and 2 buses. The quarterly receipt of his vehicles were summarized as follows. Okay, so jeepneys 150,000 sa passenger, cargo that's 10,000, so total 160. Taxi bus, ang yung passenger income of 200,000, ang cargo niya is 40,000, so 240 ang total. So the question is, assuming Juan is a VAT registered person, his quarterly percentage tax is, assuming Juan is a non-VAT registered person, his percentage tax is, now you compute. So letter A, he is a VAT registered, right? Okay. So, since VAT registered siya, only the passenger ang subject to percentage tax. Okay? Okay? VAT registered man siya. Di ba? Ang nasa table na to, basta person, domestic, 3% percentage tax bina ang passenger kay person. Pero kung cargo or goods, pwede na VAT 12% VAT kung VAT registered siya. If not, then subject to 3%. Okay? So that's the rule. Okay? Kay me off man. Okay? Kay me off to register is a VAT register. Okay? So here, we only consider the jeepney passengers of 150,000 plus buses of 200,000, so that's 350. So the tax rate of 3%, so the tax due is 10,500. Okay? So now, what if Juan is not VAT registered? So kung not VAT registered siya, so tanan na ang subject to VAT because automatic ang passengers is automatic subject to 3%. Ang cargo, di man siya VAT registered, so dapat mo pay siya sa percentage tax na. Okay? Hindi mo siya VAT registered. Okay, sa letter A, magod VAT registered siya mga passenger natin consider. Sa letter B, non-VAT naman siya. So the entire gross receipt, which is 400,000 times 3%, so that's 12,000. Okay? So that's the answer. Okay, next problem. Cardo is an operator of a taxi in a car for hire in Cebu City. The taxi reported a gross receipt of 26,000 for the quarter. The car for hire was indefinitely garaged for repair. It registered only 1,000 receipts for the quarter. Compute for the percentage tax. Compute daw. The answer should be, so now, tanaw na to, di ba na ang minimum, right? So, ato ta mag-base. Taxi na siya 26. Pero ang minimum sa quarter is 2,400 naman. So, unsa mong gamiton? Ang 26,000 imong gamiton. Okay, kini. Because higher, whichever is higher. Sa car for hire, kinaguba man, okay, yeah, 1,000 na daw ang receipts for the quarter. Pero ang minimum niya is 1,800 kung provincial. Okay? So, we will use the 1,800 nga rate. Okay? Diba? Ma'am ni siya, oh. Car for hire without a chauffeur, 1,800. Okay? So, mo nang gigamit na ito 1,800 here. Okay? Car for hire. Kaya naguba man. So, wag yun ay gamit. So, wait, driver. So, we use the 1,800. Whichever is higher between the actual of 1,000 versus 1,800, we'll use the 1,800. Total all, gross receipt, 27,800. Multiply by 3%, that is 834 pesos. Mo na iyang tax due for the quarter. Okay, next. The Philippine operations of Singapore Airlines of a foreign air carriers reported the following gross receipt for the quarter. So incoming, outgoing, so transport of passengers, that's 24 million. So incoming, transport of baggage, that's 8 million. Incoming, that's 22,000. You have outgoing of 36, transport of passenger, transport of baggage of 11 million. So the total outgoing is 47. Total gross billing is 79. Now compute for the percentage tax. Compute. You have a minute to compute. Okay. So the answer should be 330,000. So gross receipts of 11 million times 3%, that's 330. Anong 11 million naman, sir? Take note na only outbound fares for cargoes like baggages are included in the tax base of a percentage tax. Kung sa may gi-provide sa balaod. Section 118. Okay? Take note. International cars doing business in the Philippines of their gross receipts from transport of cargo. So, ari na ka sa cargo. Okay? So, ilabot ang passenger. Okay? Transport of cargo from the Philippines to another country. So, while labot ang incoming. Kaya ang gingon sa balaod, transport of cargo, which is baggage, and then from the Philippines to another, which is your outbound or outgoing. So, that is why we consider 11 million. 11 million times 3%, that is 330,000. Okay? Assume the above data is for Forgo, an international shipping carrier. Compute the percentage tax. The answer is still the same, 330,000. Why, man, sir? Because again, paragraph B of section 118 provides international shipping carriers doing business in the Philippines on the gross receipts derived from transport of cargo from the Philippines to another is subject to 3% tax. So same rule, cargo, which is the baggage, and from Philippines to outside of the country, which is the outgoing. So 11 million times 3%. Assume the above data is from the Philippine Air, a domestic air carrier. Compute for the percentage tax. Okay, compute. That is none. Not subject to ano. Zero. Why? That is VAT exempt. Ang transactions ng Philippine Air is VAT exempt outside. Okay? Take note that gross receipts of international carrier shipping carriers doing business in the Philippines derived from transport passenger cargo from the Philippines to another country shall be exempt for VAT. Okay? So that is under Revenue Regulation number 1328. Okay? So walay percentage tax side because subject to VAT, but walay percentage tax because exempted man sila. Okay? Exempt from VAT. Okay? 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 Now to the netong rule. Domestic cargo. Okay? So, di ba? So, 0% tax to. Because, personal cargo, Philippine Airman, domestic, right? So, that is subject to 12. Ang yung domestic travel, subject to domestic VAT. Ang yung international shall be 0% VAT. Okay? So, take note lang aning nga rule. Mora na inyong i-file. Okay, so let's proceed. Section 128, returns and payments. Percentage tax. So take note that every person subject to the percentage tax imposed under this title shall file a quarterly return on the amount of gross receipt of his gross sales, receipts or earning and pay the tax due thereon within the 25 days after the end of each taxable quarter. So kung March, that's April 25, June would be July 25. So every 25th of the month following the quarter. Okay? So where to file, except as the commissioner otherwise permit, every person liable to percentage tax at his option, a file a separate return to each branch or place of business or consolidated return for branches or places of business within the authorized agent bank. Pwede ba yan sa bangko, revenue district collection officer, or collecting agent or municipality or city treasurer. Okay? And that's it for percentage tax. So that ends the lesson for the entire business transfer taxes, so VAT and percentage taxes. So I'll have separate discussions exercise when we answers na lang the exams. Okay? That would be all for now. Thank you.